What goes up must come down. And that was certainly the case with the inflation rate yesterday. So what does that mean for the Bank of Canada's interest rate announcement next week, a week from today on Wednesday? I'll dive into that as well, take a look at the latest real estate numbers for the GTA, and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me on this beautiful sunny Wednesday afternoon. What a contrast from yesterday around this time. Wow, when it looked like the skies had opened up, and I hadn't seen that much rain since like 2013 or something, when the whole city was flooded. And there's a lot of flooding going on yesterday as well. Hey, Sandra, thanks for joining me. So I hope everyone, got to where they wanted to go and came home safe and sound. Wasn't too much damage done. I saw some pictures, and oh boy, it was crazy out there. So, but speaking of flooding, my inbox has been flooded with DMs about people asking me, now that inflation has come down again, what does that mean for the interest rates? Does that mean another rate cut is coming? So as you know, if you've been following me, I've been talking about the correlation between inflation and interest rates. When inflation starts coming down, the Bank of Canada starts cutting rates. So, and they did that last month. So they cut it in June. And the next announcement is next week on the 24th of July. And there's not another announcement until September. So they're going to skip August and go into September. So it's going to be about a 6-week or so time frame between announcements. So I'm going to dive deeper into the inflation numbers and try to see what Bank of Canada is seeing, and then try to give my best guess or gut feeling as to what's going to happen next week, because realistically nobody really knows. I don't really know what's going to happen. All these experts that are saying yes, there's going to be a cut, no, there won't be a cut, don't really know. Everyone's just speculating. So thank you to all who are joining me so far. I do want to keep this as an interactive show, so if you do have any questions along the way, by all means, please post them here or comment your question below, or just give me a like if you agree with what I'm saying. That's cool. Even if you don't agree with what I'm saying, that's fine too. Go ahead and provide your opinion here. It's an open forum. And I'm happy to take your questions. And you never know who else watching has the same questions. So that's why it's very helpful when you ask your questions here, then I can answer them live and help anyone else who may be watching. If you happen to be watching this on the replay, by all means, you can still ask your questions and I'll get to them ASAP. But live is best because, like I said, maybe someone else watching has the same questions and you can ask follow-up questions, et cetera, all that fun stuff. Cool. Okay, so without further ado, yesterday the CPI came out, which is the Consumer Price Index, which is essentially the headline inflation rate, dropped to 2.7%. And when I say dropped, be careful, because it is still up year over year. So it went up 2.7 year over year. However, it dropped month to month, because last month, if you recall, it was up at 2.9%, which was a tick up from the previous month in April, when it had come down to 2.8%. So it's been coming down steadily in the beginning of the year. It hit a low of 2.8% in April. Everybody was excited and say, oh yeah, great, inflation is on its way down. And that means interest rate cuts, etc. But then it took us by surprise and went back up again in May. So right after Bank of Canada's rate cut, so people were saying, I told you so, you shouldn't cut the rates too soon, blah, blah, blah. So that had some people, wondering whether that was the right move or not. So now it brings us to yesterday, where it came down again. Now it's dropped 2 points to 2.7%, which is in line with Bank of Canada's target range. They're hoping for a range between 1% and 3%. As long as it's in that range, they're happy. and they'll probably continue to cut interest rates. But what goes into this inflation rate? What's the basket of goods? What are the percentages of things that are driving inflation to 2.7% as of June 2024? Gas, for one thing, came down. So there was a huge spike in gasoline in May. So that caused a little tick up to 2.9% year over year. But now gas has decelerated in inflation and is now, I think, at like 0.4% or something. It was down from 5.6% increase in May. So it only went up about 0.4% year over year in June. So that brought the headline, the whole average inflation rate down. But what actually brought it up? Well, groceries, for one thing. If you've ever been to a grocery store lately, you know exactly that groceries are still going up, unfortunately. But also shelter costs, and primarily mortgage interest cost, which is a huge component of the shelter basket of goods. And I'm going to show you here right now this little chart. I don't know if you can see it. I know it's backwards. But you see the biggest line here, which is the largest contributor to inflation. That is shelter costs. And as I said, a large component of the shelter costs is mortgage interest. So by increasing the interest rates over the last couple years, Bank of Canada has artificially increased inflation as well, which defeats the purpose because they're trying to bring inflation down. And here they are bumping it up because of the interest rates. So it's a bit of a catch-22, right? So you're going to say, well, why do they continue bringing up interest rates? Well, there's more to it than that, right? Obviously, because they're trying to make everybody poor enough so they don't go out and spend money, which is a flawed theory, in my opinion, because only the little people will be affected by these interest rates. The people who actually go out there and spend money don't give a rat's ass about the interest rates because they're going to spend money anyway. So it's to me, it's a bit of ass backwards kind of thing. But anyway, I have no control over it. All I can say is point out that shelter costs are up, right, year over year, and that's the driving force of inflation. So if you were to remove that, let's say we were to remove mortgage interest cost from the component of inflation, I would bet it would be down well within that 1% to 3% range, way less than the 2.7%, which came out yesterday. I would say it would be like around 1 point something, very low percentage rate. So I hope Bank of Canada sees that and understands that the high interest rates are only contributing to the higher inflation. And if they cut interest rates, it'll help overall with the inflation rate. So that's one thing. The second thing is, and since we're on the topic of shelter costs, they actually formed a larger part of the basket of goods than the previous month, which sounds kind of odd, right? You would think they would try to keep consistent, the numbers consistent. So everything in the basket of goods has a certain percentage that attributes to the overall inflation rate. But these numbers change from time to time. Don't ask me why. I mean, it probably has to do with how many are in the pot to begin with, right? So everybody gets a share of it. I don't know the details. I'm sure someone out there can explain it better. All I can say is that shelter costs for the last year or so, up until May, were at 28.34% of the entire basket of goods. So they formed 28 and change percent, right, from April and earlier. In May, all of a sudden, it went up to 29.15%, so almost a full percentage point up from 1 month to the next. And that's where it is now in June. So that may also have contributed to the increase in inflation from April to May. So if you recall, it went up from 2.7% to 2.8% from April to May. And if you consider that the shelter costs are a large part of the inflation driving it up, and you increase that component, well, then obviously inflation has a chance of going up as well. So hopefully Bank of Canada sees that as well and says, okay, you know what? Yeah, it went up from April to May, but there was a bigger percentage of shelter costs involved in that equation. So maybe that's also what brought it up. I don't know. Again, I'm not an expert in this stuff, but I'm just thinking out loud here and saying that if you're giving more emphasis, if you're putting more emphasis on shelter and that's a driving force to inflation, well, then obviously it's going to come up anyway. So hopefully they'll see that and they'll factor it into their decision next week. And then thirdly, we have to look at unemployment. So it's not only inflation that Bank of Canada looks at, they also look at the unemployment numbers, right? Because they want people to lose their jobs. Because if people don't have jobs, they don't have income, they can't buy anything. If they can't buy anything, it's going to bring inflation down. That's their flawed theory. So they're looking at unemployment numbers, and they actually went up to 6.4%. And from the beginning of the year, that's up about 3.3 percentage points. I think it was at maybe 5.9 even in December. I think it went up to 6.1 earlier this year, and then 6.2, and now it's at 6.4%. So more and more people are losing their jobs, regardless if it's part-time or full-time. I'm just saying overall numbers are up for unemployment. And hopefully that also factors into Bank of Canada's decision. And they know that people are hurting right now. And the right thing to do, hopefully, is to cut interest rates again next week. So I'm not saying there will be a cut next week. I'm just saying that there probably will be a cut next week. My gut is there will be a cut next week, considering all these numbers. And if I was to put money on it, then I would say there would be a cut next week, but it's going to be a small cut. It's only be maybe 0.25%. It's not going to be anything more than that, bringing the overall interest rate to 4.5%. Right now, it's at 4.75. And I say that because the next interest rate announcement, as I mentioned off the top, is not till September. So I think the Bank of Canada will make a cut now because they see what's going on here. Hopefully they see what I'm seeing and make that decision next week, make a cut next week, and then we go through this whole song and dance again in September. And a lot will change between now and September, because we've got more unemployment numbers coming out. We've got more inflation numbers coming out. Every month it comes out. So you can have at least 2 unemployment numbers come out before the next rate announcement, and at least one more inflation number to come out before the next rate announcement. So let's see what happens next week. Again, if I was a betting man, I would probably say, yes, there will be a 0.25% cut next week. So if you have any questions about that, by all means, again, post them here, or if it's a more private question, you can always send me a DM as well. So moving on, let's take a look at what's going on with respect to real estate in the GTA. And, it's summer, right? Things are going to be slow. There's nothing earth-shattering about this. Market isn't crashing. It's just typical summer slowdown, in my opinion, as to what's happening here, combined with people sitting on the fence waiting for interest rate cuts to come down. So buyers are waiting for rates to come down so they can qualify for a larger mortgage, so they can afford a better home as to what they're looking for. Sellers as well are sitting on the fence if they can afford to. If they have to sell, you have to sell. But if they can afford to wait, then they're also waiting because they're hoping prices will go up, right? So buyers are hoping prices will come down, but sellers are hoping prices will go up. No guarantees of either, right? That what's going to happen. I'm just saying this is some people's way of thinking, because they think, okay, if rates come down, if interest rates come down, it's going to bring more buyers into the market, and if more buyers come into the market, hopefully that'll increase competition, that'll increase the number of offers, and it'll increase home prices, right? Logical way of thinking about it, but again, there's no guarantees of that happening. We don't know if it'll happen. We don't even know if rates will come down, right? It's all speculation. It's all theory. All I can say is if you have to sell, then sell. If you don't have to sell, then maybe you can afford to wait a little bit and see what happens. Because summer is not the best time to put your house on the market anyway. If you can afford to wait, it's probably better to do it in September anyway. So this whole landscape may change in September. Hopefully the market picks up a little bit. And if everyone's theory is correct, as rates come down, more buyers will enter the market, and maybe we'll have a decent fall market. No guarantees of anything. We don't know. But that's the way I see it. So having said all that, I looked at what's happening in July so far. So the first 16 days of July, I'm not counting today because we're only halfway through the day and most transactions happen in the evening. So I looked at the first half of July and compared it to the first half of June just to see how it's different from month to month, and if things are picking up a little bit, if they're slowing down even more. And in fact, they are slowing down a little bit from month to month, but it's a typical summer slowdown, right? So we're seeing less inventory in Toronto in the way of new listings, down 10%. And in Peel region, it's down about 7%. Sales volume is in line with that. So in Toronto, sales came down 11%, again, in line with a 10% drop in supply. In Peel region, sales fell about 5.5%, again, in line with supply coming down 7%. So nothing earth-shattering about that. The number of showings decreased as well. So it came down about 20% in Toronto and 16% in Peel region. Now that sounds like a lot, but there's a reason behind this, because when you look at the calendar, you will see 3 weekends in the first 16 days of June, and weekends are the busiest time for people to go out and look at listings and look at houses, etc. So we had 3 Saturdays, 3 Sundays in June for people to do that. But in July, in the first 16 days of July so far, we've only had 2 weekends. So that's a whole weekend of people going out there looking at houses, of open houses and all this stuff that you take away from the equation. So it's relatively down by a third. It should be down by a third, but it's only down by about 20% in Toronto and 16% in Peel region. So that's not bad. That's not bad, actually, the amount of activity decreasing that much when you consider there's one less weekend. And on top of that one last weekend, there's also Canada Day that factors into the equation. And as you know, that's a long weekend, and people tend to go away to the cottage, blah, blah, blah. On that long weekend, they're probably still driving home on the Canada Day, or they're still up at the cottage or whatever they're doing. The last thing they're doing on Canada Day is going out and looking at houses, right? So you remove a whole weekend, and then you remove another day for Canada Day, and no wonder the amount of showings are down for July thus far. And no surprise as well, the number of offers are down. We have a 26% decrease in the number of offers in Toronto and a 16% decrease in the number of offers in Peel region, which is in line with the number of showings. But what's interesting to me is that the number of offers compared to the number of sales, so the ratio of offers to sales, has actually gone down, which tells me that there's a bit less competition, which is, again, is no surprise in the summertime because fewer people going out there, fewer offers, fewer sales. But this is actually a great opportunity if you are in a position to buy right now, because there is less competition. So for example, in Toronto, in the first half of June, we saw about 2.15 offers for every sale. But now it's under 2. It's at 1.8%, 1.79 really, for every sale. So 1.8 offers for every sale. And in Peel region, in the first half of June, it was 2.8 offers for every sale, and now it's only 2.5 offers for every sale. So great time for buyers. Grab this opportunity if you're in the market, because there's way less competition that you have to deal with, which means you're going to get a better deal. and better terms for you. So not only better price, but also you can add your conditions in there, like finance condition or home inspection condition, et cetera, et cetera. Okay, so the market is certainly balanced right now. It may even be favoring buyers at the moment. So it's a good time if you are on the buying side for sure. All right. And things are taking a little bit longer to sell. So the days on market is up slightly, almost 4 days for Toronto and almost 3 days for Peel region. And the reason I say this is a typical summer is because the numbers aren't very different from last year. So when I compared the numbers for the first half of July from this year to last year, they're actually quite similar, right? The only difference is things are taking a bit longer to sell, right? That's about it. I mean, the amount of sales is similar, maybe only down like less than 4% or something like that. The amount of inventory is similar, et cetera, et cetera. Things are just taking a little bit longer to sell. So there you have it. So if anyone has any questions, I'll be happy to take them now. Otherwise, I will let you go and see you next week when the Bank of Canada makes their decision. So I'll be back here and fill you in on the latest Bank of Canada and what's happening in the market at that time. Otherwise, have a great afternoon, everybody. Stay safe. Ciao.